Hello everyone and welcome to Day Trader S&P 500. Today is Tuesday, February 14th. Happy Valentine's Day to all of you. This is Dale Woodson, editor of Woodson Wave Report. Today we're going to talk about Fibonacci time spirals, one of my all-time favorite subjects. Started working on this in 1996 before I even started Woodson Wave Report in 97. Anyway, one of my all-time favorite topics or subjects, if you will. So let's get right into it. Let's see if we have a pick of, let's start here. From the all-time high, this is turning nicely. You can see the stars marking the turn dates. Low, high, high, low, high. And I want to stop right here on 2.9. I cannot emphasize how important that high was to hold here the next day on the 10th. Okay, this is the cash market, by the way. The cash held by 5.31 points, held the make or break, that is. You can see the make or break was 45.95.31. The high the next day was 45.90. If that didn't hold, we'd be looking at 1 up, 2 down, 3 up, 4 down, 5 up, change of trend, new all-time highs. Okay, but we're not. It held. It was there for a reason. Okay, because it couldn't go over the wave one low. Well, anyway, but what we're looking at here is that high has to hold, that 34-day high plus a Fibonacci 2 days has to hold for this 55-day to mark a low. I've got that in highlighted, and I can't stress that enough. Historically, and when I say historically, I'm going back to 1996, these things work, but they don't work when the 34-day high is broken to the upside. So if this moves up higher than this high here, 45.90, 45.95, then February 28 will not mark a low. I can't emphasize that enough. But if it does hold, then this day, plus or minus 1 or 2 days either side, should mark a low. It's a potential for a crash. Is there a guarantee? Absolutely not. Crashes are very rare. But if there's going to be a crash, historically, they happen 55 days from the all-time high. But it should at least mark a lower low than this low here. Okay? It's got to take out wave 3 down, has to take out the wave 1 low. Okay, so that's what we're looking at on the S&P cash, the ES, the minis, the futures. They are the same. I wanted to show you guys this other spiral because of its uniqueness. And let me see if I have that here. That's the E-mini futures. That's the same one. This one. And as subscribers know, all these spirals I've done over 25 years, I've always started from a high to find the 55-day low. This one, for some unknown reason, I started from this low, which looked like a retracement, and I started tracking the days after the low, and it came up with all these turn dates. And then it has the most recent one on November 5th, which just so happens to be in the expanding triangle wave count. I don't have the lines here. The orthodox top of what would be 3, which would mark that next turn date as the bottom or the E wave of the 4th, which would be March 16th. If it marks a low, it could mark a high. But anyway, I don't really like this expanding triangle. It moved to alternate count because the move down here from the January 14th high is breaking down clearly in 5 waves. It's hard to say that's 3 waves like these are, A, B, C, A, B, C. That's up, A, B, C. But anyway, we'll see how this plays out. There's a chance that the March 16th could mark a high. It could mark a low. We don't know at this point in time, but it'll reveal itself well before March 16th, okay? But that's the one that has an entirety of 1 minute and 1 day of slippage over the course of a year. And that's nothing compared to the one from 1999 to 2006, which I've shown over a period of time, it was 2007. It lasted 7 years from the 1999 orthodox top, but that's a topic for another day, okay? Let's see. I want to show you guys something else here. Let me get into the report that we put out. We're putting out so many reports for our monthly subscribers, 2, 3, 4 a day. So anyway, here is that same pick with the hourly from the January 4th, the turn dates. There's our targets. That 39.99 is the initial target. But I want to get into these prices. Okay, let's get into that if we can. Okay, let me scroll down. Here we are. Here we go. So third wave. In these big declines, they typically don't go 1 to 1 or 1.618 to 1. They go 2, 3, even more. But anyway, as you can see, the NASDAQ has already hit the 1 to 1 and the 1.6 to 1. That is the wave 3. All right, and the Russell has hit the 1 to 1. But the S&P cash and futures have not yet. That don't mean they won't. I think they will. But this is just to show you how far they still have to go. They're still in the initial stages of their third wave, this wave 3 over here. So that's how far they have to go. Just wanted to give you guys a little perspective on that. Should have done the Dow, but I didn't. There's that 228 turn date. This date 29 absolutely has to hold, or that turn date is eliminated. And I'm talking about the February 10th high. Again, I can't emphasize enough. In order for the 55-day time spiral to mark a low, the 34-day high must hold. Okay. Thought I had another. Oh yeah, that's that other chart here I wanted to show you guys. The time spiral from the March 4 low. There we go up to the November 5th high. And the next turn date in the sequence is March 16th. But the one coming up before that is 218. I think that might be on a different spiral. It's yeah, it's on a different spiral. I'll probably have it here. Let me see if I have it in the report. That's next weekend. That's 316. That's 423. Here it is right here. This spiral here from near that 11.5 high. Okay, the turn date here coming up is the holiday weekend. Monday's a holiday, so we have Friday the 18th and Tuesday the 22nd, and that's coming up this weekend. So we'll see if that makes a near-term low, if you will, okay, or maybe a counter trend bounce high. But that's the next turn date in the sequence. Okay, I wanted to give you guys that, and I want to show you guys something else here. Okay, let's get into the news. There's been a lot of news lately, and I could read this all, but I've had subscribers with me for over 20 years, and I started the newsletter in '97, and I started doing a lot of this stuff a couple years before that. But we look at things completely different at Woodson Wave Report. We look at dates and then wait for the news to happen. Okay, so we're going to look at turn dates, as you just saw, and then there'll be some kind of news event that'll happen that they'll blame it on, or they'll give it for a cause or a reason for the market moving. Okay, and just like, you know, we look at the date and anticipate a move before it happens and watch them fill in the blank for the news event. And like I said, after a couple decades of this, it's almost comical. You can see it coming from a mile away. And the other day was the CPI numbers, highest inflation in 40 years, were blamed. But the news came after Woodson Wave Report expected wave 3 in the bond market to extend. It was 1.92%, and that was going back to last August. We had that target well before there was any news. Okay, and then Bullard came on TV and said he was in favor of the first half-point rate hike since 2000 and 100 basis points by July. And again, they blamed that on the news, but the market, both the stock market and the bond market, those targets were there before the news, the target prices, and you know, we have the turn dates. You know, as far as news creating the market, we look at dates and wait for the news. It's, you know, as humans, we used to think that the sun revolved around the earth too, right? So we'll see, but that's the way we've been looking at it for quite some time. So I want to leave you guys with this, because this is the most pertinent. Okay, we have that turn date 55 days after the high. Again, this high must hold. This was the most critical day in the market in years. That next day on the 9th or the 10th, whatever it was. See if that holds. If that holds, this is on for a low, lower than the January 24th low. Okay, that's it for today. Until next time, Take care, everyone.